Is a dollar store a good business to own, and are dollar store stocks a good investment to buy? We disagree with almost everybody on this topic. I'm going to explain why today on Franchise City. So before we begin, I love dollar stores, and to date, I've loved the industry as well for an investment, but I'm going to show you a few things that most investors have not considered. So first off, the positives, and this is why most people still suggest investing in dollar stores or owning a dollar store. At this point, dollar stores sell more groceries than high-end chains like Whole Foods, $10 billion a year more, in fact. There are more dollar stores right now than all other 6 of the biggest outlet stores combined. That includes Walmart, Kroger, Costco, Home Depot, CVS, and Walgreens. And while the retail apocalypse last year saw thousands of stores closing their doors, dollar stores, they blew away every other industry by a wide margin. And if you look at this chart, you can see that dollar stores by far beat out convenience, drug, liquor stores by a wide margin. In fact, on average, 3 new dollar stores open up every single day, and there are expected to be about 38,000 dollar stores by 2021. Here in Canada, Dollarama, they had a 9% increase in sales for 2019 to $946 million, and your average cost to open a dollar store is about $250,000. Now, if you were an investor, you also saw nothing but upside with solid returns for most of the publicly traded dollar store stocks. Huge gains over the past decade. Now, as of today, however, we are likely heading into another recession or possibly a depression, probably there already. And if we look at the statistics from the last downturn between 2008 and 2011, shares of Dollar Tree soared almost 200%, while the S&P 500 gained only 30% over that same time period. Sales of inexpensive items during an economic crunch, they go up. People don't have money, they head off down to the dollar store. So everything looks rosy. Why should we be concerned? Well, there's a few reasons. One in particular I think could be very disruptive to this industry. But the first is market saturation. Every single industry we see a market saturation points. It happened with frozen yogurt. It's happened with food in general. And people, they see how well an industry is doing. Everybody and their uncle rush in. It's a herd mentality. And ultimately, average unit margins on a store drop. You see more and more dollar stores popping up, competing with each other right next door. Now, this, of course, it's going to be highly regional, and your own city scenario is going to determine the outcome. Now, also, keep in mind that many cities have come to dislike dollar stores because they hurt other businesses. Some of these cities have even implemented restrictions on stores. That brings us to number 2, which is something called dispersal restrictions. And some cities, they put limits on how many dollar stores can open up in an area. So Tulsa, Kansas City, Mesquite, Texas, New Orleans, just a few cities that have adopted these restrictions so far. And the rationale is that these dollar stores really make it difficult for local stores to compete. They're doing this because there's way too many dollar stores, which if you're an owner who has 10 immediate stores in the vicinity around you, your profits are going to be limited due to this saturation and a competitive market. So before you open a store, check your regulations, see if there are these disbursement restrictions or regulations, and for stores in the area or for stores that might be opening in the future. Number 3 is low margins. And a lot of people don't think about it this way, but the average profit on a dollar store product is about 35 cents. And that's assuming that you purchase very well. That means it takes 200,000 individual sales just to make $70,000 a year. That's 547 sales a day, or 45 sales every single hour, 365 days a year. You need enormous volumes, even just to make a livable income. And while stores that opened up 10 years ago did phenomenally well, it's much more difficult now when you have dozens of other similar stores around you. But let's say your own city has a great opportunity. There's low competition. There's another potential issue that I believe might be the biggest problem. And that problem, which is number 4, is inflation. And we really need to look at history on a grander scale to see what might happen today. Take a look at these companies: Ben Franklin Stores, M.H. Fishman, Butler Brothers, W.T. Grant. Now, it's likely you've never heard of these stores, but at one time they were thriving with thousands and thousands of stores all across the USA. Back then, these were the dollar store equivalent. They were called 5 and dime stores, 5 and 10 cent shops. So everything in these stores sold for a nickel or a dime. They were very popular, equally as popular as our dollar stores today. Now, eventually, over time, public sentiment, shopping styles changed, but obviously something else happened that had a major impact, which was inflation. And as the value of the dollar dropped, you simply couldn't make a product for 3 cents and sell it for a nickel, or make a product for 6 cents and sell it for a dime. And right now, the government is injecting trillions of dollars into the economy, basically making it out of thin air. And this, of course, creates a risk of debasing the currency, making a dollar worth less than it is today. So in this scenario, just like the 5 and dime stores, the dollar store model might not hold up anymore when items simply can't be produced or shipped and produced for pennies. Which brings us to the concern number 5, which is relations with China. So we all know the current administration, they've had ongoing tense relations with the Chinese. Can you imagine what would happen if we lost the ability to trade with China? You might say that's unthinkable, but come on. So was a pandemic just a few months ago. You could never, ever produce dollar store items in the USA for the prices that buyers are accustomed to paying in the dollar store. So if relations with China continue to deteriorate, that could create issues in these industries. Just a couple of considerations to think about if you're seeking to invest in a franchise. Our expertise is always free for qualified buyers. You can learn more by clicking the link above. Please like and subscribe. Thank you for watching.
You are listening to Franchise City, a better way to buy franchise.